Conversation about meme stocks. They've been one of the biggest market stories of the first half of the year with the huge surge in AMC shares in 2021. Some might have thought the theater chain could make it into the large cap Russell 1000 index during Russell's annual reconstitution that took place after Friday's market close. AMC didn't make it, but that's only because when Russell took a snapshot of the market last month, AMC hadn't yet experienced its big share run-up. By contrast, though, GameStop was big enough to make it into the Russell 1000, and we want to know how that's going to affect institutional buying of the stock and what happens to meme stocks when they grow up. Joining us right now is Herb Greenberg, founder of Herb Greenberg Research. Herb, it's great to see you this morning.
Andrew, great seeing you.
I'd love to I haven't talked to you in so long. I want to hear about what you make of this whole meme stock phenomenon and what it may do to the institutions and to these indexes. I mean, can you will a company into success like this?
Well, obviously you can, for whether it's temporary or whether it's permanent. As the meme goes, I don't know, and neither does anybody else. But I think what's important when you look at, even if you just look at the Russell and you look at the rebalancing, it's an important lesson people have to pay attention to, because we're talking about what made it in, what AMC did, what GameStop did. But I think the important number in that entire reconstitution, beyond meme stocks, Andrew, is that 323 stocks actually left the Russell 2000. And of those, what's really important, only 30 went up, including obviously GameStop, to the 1,000, 286. Think about that. More than 10% went off to the Russell microcap. So the question is, when you talk about these meme stocks or some of the SPACs that made it into the Russell 3000, where will they be next year? That's really that's the great part of this of this situation, as far as I see it, because that's the puzzle that we just don't have the missing piece for.
You're asking the question, but I'm curious what you think the missing piece looks like. Meaning, where do you think those SPAC stocks will end up, for example?
Oh, I think some of those SPAC stocks are going to be gone. Oh, I think look, it depends on the market. It depends on the market, right? If it continues to be a market that doesn't care about anything but the story and the projections inside those SPACs, if that's all people care about, yeah, they'll continue to rise. But you tell me what's going to happen in the market, and I'll tell you what's going to happen to some of the SPACs that made it in. And I'm talking about those recently de-SPACed companies, the ones that have nothing but projections. I like to call it hypothetical gibberish in these projections. And I think that's the part that, when I start thinking about it and what's going to happen to these things, I say, I don't even know how they got into the Russell 3000. I know how they got in this kind of market. But the real question is, can they stay there? And I don't think, if this market has any weakness, I think they deflate.
And if you're thinking about buying these indexes, then how does this change your thinking, or should it?
Well, Andrew, look, I'm not a macro guy. I don't think about, what Muhammad might think about in terms of the markets. I'm looking at individual companies. So I come back to single stock selection, and I'm sitting here, in a new venture that's looking at short selling, of all things, in this market, right? Because I think the opportunity in this market is better than it was, say, 2 years ago. And I think that you have to start you always have to look at the underlying stocks. You want to know what's going to happen in the index. I can't tell you what's going to happen in the markets, Andrew. But I can tell you that in those markets, there are companies that don't deserve to be in those indexes. Some of those companies, I would say, don't deserve to be public. But any company can come public, right? Just because you're public doesn't mean, it's not some as I said on Twitter the other day, being in an index or being public, it's not a good housekeeping seal of approval. It just means that you got public. Now you got to stay there, and you got to stay there. And if you have projections out there that are 5-year projections, now you have a target on your back. You've got to make sure those projections can stick and that you can live up to those projections. And that, of course, is the real challenge for any of these companies, especially if they sort of just, are part of a great narrative and a great story.
Shepard Smith here. Thanks for watching CNBC on YouTube.